MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on, everybody? How we doing? How we feeling? Got some nice range-bound action this morning as the market preps for home sales at 10, and it's a Friday. That helps. We'll see how today plays out. Right now, we're just trading inside of this range. We pretty much range-bound overnight. And now we got this range above VWAP, pretty much between the PR high and PR plus 2. Just picked up some inventory off VWAP. Had some earlier inventory around the 9 o'clock period. Took us back inside that PR plus 1 zone. So now we're pretty much looking at supply around 440, and we just dropped the inventory. Interestingly though, YM is kind of, in a way, doing its own thing. Well, when I checked it in the pre-market, it already broken below its or into its bear zone. So YM was seeing a little bit of selling this morning. Let's see, that was at 400. So currently picking up inventory off 400. Slightly choppy. Alright, there's a lift of supply. So it was a brief supply area right there off of 410. Once we drop inventory down to 400, so now we're going back into PR plus 1. Quick supply response took us right back to 400. We got automation there around 410 with some MSRP, one of those MSRPs being VWAP. We're seeing a response there, quickly taking us right back to that inventory at 400. So sort of a battle going on here. It appears if our buyers really, being somewhat aggressive here at 400. And of course, the potential remains that we can drop inventory one more time. So this market, this price could go in either direction. There we go. There's the inventory drop. Putting pressure on that inventory zone. How low did they take it? I think the other day YM was kind of doing its own thing, and eventually the market kind of went in a direction of YM. We'll see if that same situation will play out. It doesn't have to at all. We just dropped inventory to around the 385-ish area. Now catching a supply response off of 400 where we have automation. That was our previous inventory zone. One thing so far about these supply responses, they've been pretty quick, pretty strong. Gives me 390. Another inventory response off the 390 and 390 area. VWAP still hanging around at 410. It's probably not going to move for a while. So we just know that VWAP is around 410. The only reason I even have VWAP on my charts because it's kind of want to see what institutions are doing or looking at, get a sense of one of the things that institutions are looking at. That's an institutional, something that's popular with institutions. And it's got that customers are trying to get a certain amount of points off the VWAP. But I don't put a whole lot of weight into it. I just kind of look to see what kind of response is there. And in the interest of the second half of FTR with trader triggers and all that stuff, I done had some nice winners out the gate. I think it's gonna be a light day for me. If I was doing my normal thing and just trading my normal session, like the whole window, I would keep trading. That's based off of my plan and my strategy, of course. But since I'm already up pretty decently, and then I'm definitely going to get disturbed within 15 minutes, or 15 minutes, that's when I usually want to be out of a position. Also considering the fact that you have some news at my B-Force period. It's gonna make it a light day today. Ended on a positive note. Had a pretty good week this week. Really don't need to get too aggressive. So now we've broken above VWAP. Got some MSRP up there at 416, and where we're seeing a supply response. That last inventory lift Took us to about 395. Still lifting the supply. Stair-stepping our way into higher supply. They have some previous supply here that front ran 420. Kind of look at VWAP as being inventory now with the last push that I'm looking at by way of my tick chart. We had a nice little inventory push, a quick inventory push off of VWAP as we continue to stair-step our way into higher supply. It's actually pretty decent price action this morning compared to what a lot of the other days that we've seen this week. All my levels are holding up pretty well. Of course, they're not perfect, but they are holding up pretty well. Nice little pattern so far on this light volume. So you can kind of look at that quick inventory response there as around 416. So it's probably more like 417, but I look at these levels as zones, not price points. Nice mechanical response there. Off of this indicator that I'm simply referring to as MSRP. Give us another supply lift. We had a micro shot between that 416 area to about 425, and now we're retesting the high of that 425, that micro shot. Took us above PR plus 1. Now we're back inside of that micro shot. Another quick inventory response. Kind of look at that as an inventory lift to 420. Now that lift should hold us, but we're starting to break down. But we're still getting an inventory response. Took us back to our previous inventory below 420. Got another response there that seasons that 420 inventory area. Coming into our session high around 445. We're starting to take the elevator to the session high. For the session high, it'll break into a new high at 450 if we make it there. Getting a supply response, a quick supply response in that 440 to 445 area. Front ran the session high. did get a quick inventory response just above 430. So we could potentially be setting up a shop here. Inside of this 430, 445 area. Another inventory response. So now we're starting to see some inventory breakdown after that nice little stair-step climb to front run the session high. I wouldn't be surprised if we get some sort of inventory response that takes us back to the session high, but I would say maybe we got maybe a 50% chance of that happening. It could go either way from here. Took us back through our automation to that 420 area where we got MSRP sitting with kind of getting an inventory response off of that 420 area, mechanically off 420. Things, the way they're moving this, the structure and the price action that we've seen so far, I would say that it's pretty calm for what wholesale is seeing this morning. Usually leading up to an economic event, wholesale's job is to kind of help those with a big pot to set up their position for however they want to use the volatile moment. But they already paid themselves off the inventory that they collected overnight. They went back and collected some more that's at the open. And RTH is open. Now they're just taking care of business. We did see a pretty significant lift off that 420 area after a slight little slingshot dip. Now we're looking to see how high we can go. We did get a quick supply response around 435. So we can see we have some seller presence there, which should create some stops to squeeze. If they need to. Right, teasing that high, teasing that supply area. There's a slight lift of the supply area. So now let's go tap those stops, or maybe we can be setting it up with some more stops. If we, on these light volume days, they kind of, they gotta, it makes sense for them to, move price up and down like this, so they can create the liquidity that they need to really push the inventory and supply. Now we got inventory right below 430, or in that 430 zone. Gonna lift the supply one more time. So this is building anticipation for this an overall market sentiment. This push here is building anticipation for a session high break. Let's see what wholesale does with that anticipation. All right, there is kind of the break. There's a new session high. Not a whole lot of energy to do that. If you're a momentum trader, you want us to jump on the elevator to take us into new highs. We are seeing a supply response here though. Now starting to pick up some momentum. We're serious about these highs now, about pushing the high. So now what the overall market could potentially be looking for, by way of how people typically trade, is maybe a retest of that previous overnight high. But we have lifted, pretty far away from it, about 20 points from NQ's perspective. Of course, it's NQ's perspective. I'm analyzing NQ. Now we're starting to see that supply response. It's going to give us a break from the session high push. Cool. Had to take a quick little break to see. I was doing 2 screen records this morning. Because normally, like the setup y'all see, this is the live stream setup. But then I like to, when I record my trading sessions, I like to have a different layout. I like to record it, the actual layout. So I was trying to see if I could do that and do the live stream at the same time, recording both, and how that was going to affect my computer. That was pretty smooth. So there we go. We came back to that overnight high for the retest. Typical thing happened. Now we're back inside of that previous range, back below the previous high. Got about 5 minutes before halftime, but then we're going to go to halftime at 10 to see if we get a response at 10. Just because there's news on the board doesn't mean that they have to do anything with it. You know, typically they do. Nice mechanical inventory response there off of my PR+2 level. Overnight we had a mechanical supply response off of PR+2. Which is at 447. So, actually we got a nice mechanical supply response off of +3, but they're using the golden ratios today. My power range levels are basically based off of the golden ratio. For anybody that may be curious and missed when I mentioned it in a later video somewhere. Basically built off of initial balance, not the typical initial balance of RTH, but the initial balance of the session, and then from there I use the golden ratio to set my power range levels. Keeping it simple. I keep it simple. And then while we wait for the next minute and 35 seconds for this countdown. I'm about to start releasing a lot of stuff that a lot of the things that I've learned, a lot of lessons that I've learned, a lot of information that I've acquired along my journey. I'm pretty much gonna just give everything up for free. I'm not really into the whole paid courses type of thing unless it's something deeper than just strategy or market information, trading information. That stuff is, honestly, you can find the stuff on the internet already. You just got to do a lot of searching, and well, most of it, not all of it. Some of you do have to require some deep thought or just knowing the right person. But everything you need to know is actually on the internet already for free. And then there's a lot of tools out there that helps to be more efficient with your searches. I'm just gonna leave that note without using putting in the trigger word. So we got what, 10 seconds left. Before our B force. So far uneventful. See if we start to pick up. All right, we're starting to pick up a little bit of momentum, but not much. A little bit of energy. Starting to drop that inventory. We can start to see the volatility. Well, I wasn't paying attention to the volatility before to my Delta board, but it does seem like we're getting a boost in volatility or in volume, but not really volatility. We did start to sell off a little bit stronger, but it's not what, you know, it's not really that interesting. So anyway, let's just go to halftime. We'll be right back for the second half of Futures Trade Radio. MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, welcome back to the second half of Futures Trade Radio for another episode of Trader Triggers. So today I have sort of a controversial topic. I'm gonna get right into it. So here's the headline. The market is not random. There are random moments, but as a whole, it's not random. So a lot of times we talk about the market as some mystical thing that is impossible to figure out. Even how, even calling this environment the market, it's kind of part of that. Like it's some evil, mysterious machine sitting behind some, hidden veil or something like that, right? But what we as traders commonly refer to as the market is a collection of financial markets. You can use that term to kind of reference the collective as a whole, but generally when people are using the term the market, they're actually referring to a specific market, even though they may not go into detail about which market they're referring to. But they're talking about a specific market as one of the exchanges that houses a basket of securities, right? So let's breaking that down a bit deeper, so that that we're on the same sheet of music as I go into this. What is a market? Right. A market is simply a meeting place where buyers and sellers get together to exchange goods and services. Most people are familiar with markets where you would go to, like a store to purchase your food and household items, right? You're exchanging currency for the goods that you want. And then there's many more markets. So you have like the housing market or real estate. You have currency markets. You have the commodities markets. You have the black market, right? You get it, right? So there are all sorts of markets. So what's my point? Where am I going with this? There's one thing all markets have in common. People. All markets are made up of people. And what do we know about people? Something that we can say is true for just about every person on this planet. People are habitual and we love our patterns. I mean, it's how we survive, right? So like, for example, if you're driving and you've identified some behavioral patterns, let's say you see a car that's swerving in and out of the lanes and speeding and all that stuff, right? A defensive driver, they keep their eye out on that. And when they notice that kind of reckless driving pattern, then they'll take the appropriate action by, maybe kind of getting out of the way or letting that car get far away from them, right? But we use these patterns to help us stay safe and to survive, right? That's just one, simple example. But these markets and how we participate in them as traders is no different. There's a methodical flow to the movement of price, a majority of the time, that allows us to identify behavioral patterns that may signal when it could be a good time to get involved or to sit on the sidelines. So before I can continue on, before you say it, well, what about the algos, Rob? What about an AI and we got Chat GPT that's taking over the world now? It's more than just people. But all of those AIs, all the algos, AI, the trading bots, whatever label you want to put on it, on what's really automated information technology, are creations of people. So at the heart of it all is people. And these forms of automated information technology supports the idea of these markets running off patterns. All these tools are reliant on quantitative information. Where do we derive this quantitative information? From the habitual patterns of people. Now, on the topic of the random, or on the random side of the market, strategically, people will throw in random events to make things appear more random than they actually are. So in these financial markets, we can see evidence to that with these economic events like we just had today, the housing thing, which it was a sort of a random thing that they plugged into the calendar. And I would say they kind of used it, but not much. But anyway, getting back to the topic, we can see evidence to what these, to the randomness in this market with these economic events that are arguably part of this environment just as a mechanism to instill perceived randomness. But there's even a pattern in the way that this is done. So like you have, with crude oil inventories, when is crude oil inventories typically reported? Every week on Wednesday at 10:30 a.m. Eastern time, right? Unless there's a holiday on a Monday, which then that'll push the crude oil inventory report to Thursday at 11, right? There's a pattern in how those, and how they release these random events. Or like, when does the Fed typically do their thing? On Wednesdays in the afternoon. Sometimes Powell steps on the mic for our entertainment, in the morning throughout the week. But we can see that ahead of time by simply looking at the economic calendar and taking note of the high rated events, right? And the list goes on and on about these random events, or these events that puts randomness inside of this market, right? There's a, we can look at this for days, we can analyze that for days, but taking it a step further, when these events happen, what's expected? So when these economic events happen, what's expected? Some sort of volatility spike. Prices would either jump up or down for a minute or two, and then continue in a temporary trend, reverse in the other direction, or find a happy medium. But what happens during these short-lived temporary events is truly limited. At the core, prices either go up or they go down. That's it. Even what we call sideways, prices are trading up or down in small ranges, unless the market is closed or trading stops for some whatever reason. And even then, if you look at the things that happen behind the scenes, prices are still moving, we just can't see it. So with these random events, we can recognize patterns that we can use as indication of the best way for us to respond. Most successful traders respond by just sitting on the sidelines to these random events, these quote unquote random events, for a couple minutes until their favorite pattern shows back up. And on the topic of indicators, we can use the indicators that we put on our charts the same way that we use the indicators of our everyday lives. So like, again, going back to the the car that's speeding and swerving in and out of lanes, that's an indicator, right? That can be an indicator of potential collision. Or if you walk in the house and you see your spouse, or you meet your friend and they're frowning, that could indicate that that's an indicator that they're upset about something. Or how about, dark clouds and high winds and the sound of thunder in the distance? What could that be an indicator of? Right? Again, we have a lot of examples in nature. If we have a child, we have a baby that's crying, that could be an indicator that they're hungry, right? So in our regular, everyday, quote unquote, real lives, we have indicators. And just like in this trading environment, we also have indicators that serve pretty much the same purpose. These indicators are built on historic market data, such as volume and structure, that's compiled in mathematical equations, which we can use mathematically to make trading decisions in the present based on historical information. So just like in real life, we come up with these real world indicators based off of our history or our past experiences with these situations. Or someone tells us that, you know, if you see some dark clouds and high winds and some thunder in the background, there potentially a severe, thunderstorm is coming.
Yeah.
Right? So the same thing that we see in real life, we also see in these charts. And as traders, we can use these patterns and we can use indicators as a reference to recognize a potential shift in the market that we're participating in. So we do know that no 2 days are exactly alike, but every day has a pattern or a flow to it. These patterns from previous days can be analyzed and committed to memory, which can be helpful when we recognize the pattern in real time, right? Then we can use that when we see that pattern show itself again, then we can build systems around that will help us take advantage of those patterns that repeat themselves. So at the end of the day, what we're doing, especially as day traders, even those of us that hold positions for longer, we're looking for patterns wherever we can find them and building systems around the patterns so that we can take advantage of it and make profit, make money off of it. Now, how far we take this is completely, it's up to, how far you take it is completely up to you based on who you are and, what you can stand the risk based on your, your mental fortitude, based on your comfort level, based on your past experiences. But, all of that is required to be successful in this business. All that's required to be successful in this business is to find one or maybe a few patterns that you really like and that's easy for you to see over time. Over time, it'll become easier for you to see, and you build a system that allows you to take advantage when those patterns repeat themselves. Rather you're using indicators or market depth numbers, structure, energy or price, aka price action, the stars, the moon, Trump, the weather, whatever. No matter how you go about it, the name of the game remains the same. It sounds really simple. That's because it is simple. But the challenge comes from our beliefs and our mental fortitude, right? But that's another topic for another Trader Triggers. So on that note, I appreciate each and every one of you for tuning in to another episode of Trader Triggers. Let me know in the comment section what you think about that. I'm definitely interested to hear what kind of responses that I hear about that, or on this, to this topic. A lot of times I hear people talk about how random and unpredictable this environment is, but there's definitely what I've witnessed is a flow to each day, and the quicker you can recognize the pattern of the day, a lot of times that can help you execute on that day. So with all that being said, hope this was helpful to somebody. Hope you have a good rest of your rest of your day, rest of your session, a good weekend, and I'll see you on the next one. Trade it easy.